Whereas if I'm levering real estate, the odds of real estate intelligently bought in a good location with solid fundamentals going to zero is zero.
Yeah.
All right, Dan, today we're going to talk about one of my favorite topics, I think our favorite topics, which is real estate versus stocks. I have so much to say about this. As you very well know, I used to be a stock market over real estate
I remember
guy.
you and I used to argue about this shit.
Yeah, for sure.
Me and you actually used to argue about this.
So I understand the stock argument very well. And obviously I've flipped completely 180 to the real estate side. But as usual, you've gotten yourself into another Twitter debate with some random people that have nothing to do with your life. But I love the debate. It really shows how people think. And I think this goes way too deep in the middle class. Somehow, the middle class somehow believes that stocks are better than real estate and safer than real estate. And I think this is just so wrong. But let's break down, because this is the middle class debate. This is going to be what we hear from the average person over and over again. Why don't you break down the tweet here? How did it play out?
Yeah.
What was the conversation there?
So somebody wrote, "You might think I'm crazy, but I'll never buy rental property because I value my time. I'll increase my income instead, then put the capital I would have invested in real estate into covered call ETFs. Collect rent from your phone, not your tenants."
Yeah. So many things wrong with this statement, in my opinion. Number one, I'll never buy a rental property. Like, what if you were presented with an amazing opportunity in a location that was making tons of money? You would just never buy it. Like, it's just stupid to rule out any asset class. I think it'd be stupid to rule out the stock market too, because there's opportunities everywhere. But it just doesn't make sense to do that. Number two, the covered call ETFs. I mean, essentially what they're doing is the managers of the ETF are selling covered calls. We're not going to get into what covered calls are, but it's a way to kind of add a little bit of leverage to your stock holdings. But it's not really the odds of covered call ETFs making you financially free, or the stock market in general making you financially free, is, in my opinion, close to zero for the average person. I would say you have a 0.05% chance. We were just getting in a quick workout before this, and we were talking in the gym about, I don't know anybody personally that has gained financial freedom or any significant amount of wealth in the stock market.
Not one.
Right.
I know a lot of people that have gotten obtained financial freedom solely. Like, I'm not talking about they owned a business, bought a bunch of real estate. That's not what I'm talking about. I know people literally that have made a career out of real estate investing that are very rich.
And we're not talking Instagram stories. We're not talking.
No. These are personal relationships that I have.
People locally that we know personally, whether a social circle or extended social circle, that have gained financial freedom or significant amounts of wealth through real estate alone. And are, if you extrapolate that and say, okay, well, what about if we know 500 people each in our social circle, and we know 10 to 15 people each that have gained financial freedom through real estate, we should expect to know 10 or 15 people that have gained financial freedom through stocks. I don't know any.
I don't
Zero.
know one person.
I just don't. It's just too hard. Yeah. Now, you broke the reasons down why real estate's the better investment pretty clearly here. Number one, you talk about leverage. We're going to break all these down individually. Leverage. Number two, multiple income streams, cash flow, principal pay down, and appreciation. Levered, all of those are levered, by the way. Right? They're levered returns. And then number three, he claims that his time is more valuable. He's going to increase his earnings power. Well, guess what? If you own a bunch of real estate, you can hire a property manager and still increase your income stream for whatever the job is. So let's break those down kind of individually. The big one, man, I still think the middle class in general doesn't understand leverage. They look at leverage negatively, right? When they hear leverage, they think excess risk and the potential to just go bankrupt. Let's talk about leverage. Why is it so valuable in real estate? How do we use it as real estate investors to, get those outsized gains and gain financial freedom? Yeah,
it's simple. So you're putting down $150,000 to buy a $400,000, $500,000 asset.
20%.
20%,
Do
25%,
the math on that.
30%, even 35%. Like, it's still a good. You're putting a fraction of the amount of capital that you have to buy a much bigger asset. And the argument there is that, you could lever stocks, but like, you're going to have one hell of a time doing it. I guarantee you, if I call Pat, my account manager over at RBC, and I tell him, like, listen, man, I want to buy $500,000 worth of stocks for like $150,000.
Click.
Yeah. He's going to be like, Dan.
So there are ways to lever stocks other than getting borrowed money. Like
Yeah.
you can sell calls and all these different things.
Yeah.
The problem with those risks, like I've done some of that stuff, is if you basically risk losing 100% of your money, right?
Yeah.
Whereas if I'm levering real estate, the odds of real estate intelligently bought in a good location with solid fundamentals going to zero is zero.
Yeah,
the odds of
even
it going to zero is zero.
Yeah, okay, so investment properties are, especially commercial investment properties, are valued based on the income that they generate. Even if that property was producing zero income, which arguably it could happen, but you'd have to be a really shitty manager and operator of that property to have it go to that point. But even if that did happen, it's still worth something.
Yeah.
If
you're the land,
the property, the
materials used to build it.
Exactly, like all of that stuff. Yeah. So, but if the business that you buy goes under, they're having some sort of odd issue with operating or whatever, you could lose everything. Like you have potential to lose everything.
And the same, like the odds of Apple going bankrupt and going to zero are very relatively as low as buying a property. But if you're selling call options and doing things to gain leverage in the stock market, a lot of people are selling naked call options where they don't own the stock, right? Yeah. That's how you get leverage. Those options can go to zero very quickly. So the leverage is where you come into where you're risking all your capital going to zero. So when I really started to understand real estate, when I understood leverage, right? Do the math, okay? So if you're putting 20% down on a $500,000 property, that's $100,000. 20% divided by 100% is 5. Mm-hmm. So that's 5-to-1 leverage, okay? So if that property increases by 2%, you have now made 10% on your money. It's 5 times 2, 10%. So you're getting free levered returns in the real estate market. Also, your cash flow is levered, right? So if you create $200 cash flow a month, well, you've only put in $100,000. So you're 200 times 2,400. That's 2,400 a year divided by $100,000. It's not like you had to put $500,000 to produce that cash flow.
Exactly.
And then also the principal pay down as well. So you're getting triple header levered returns at very low risk. If anything, the bank takes more risk than you do because they're the ones that hold the mortgage. Yeah. So it's kind of a cheat code. Yeah. It's a way to game the system where the system usually games you. Now, why don't people understand this? I think it's because they're afraid of debt. I think the average person's afraid of that idea.
I think that, and they're afraid of the horror stories they hear about tenants. Like I know that from even my family, right?
Yeah, let's get to tenants in a sec. But why are they afraid of leverage? Why are they afraid of like using borrowed money? That's the problem.
That scares people.
Yes.
Yeah.
And I understand that.
Yeah. It used to scare me. Why do you think I own all those cars cash?
Right.
It's not because in hindsight, I own over $1 million worth of cars cash. What I should have done was, say, for example, that Lamborghini, I bought it cash. I literally went to the dealership. I went to the bank, grabbed a certified check from the bank, dropped it off on the guy's desk and said, I'm buying this car. What I should have done was gone through financing for 5%, taken that $500,000 and gotten 12% on my money, even in a private mortgage. Yeah. That's what I should have done.
Or you could have bought real estate or anything else that earned a return higher than 5%.
Exactly. But from my perspective, I was like, unless I can buy these cars cash, I shouldn't be owning them. Okay, that was my mentality back then. But now that I know that I can own them, I should have levered. Like I will once I get the dealership license. Yada yada yada. I start selling them off. Whatever. It's going to be all debt based, right? But that's it was a. It's not that I didn't understand leverage. It's because I was afraid of it, right? I was afraid of even leverage in that kind of situation, right? I've never really been afraid of leverage in terms of real estate, but I understand where people are coming from. Leverage can be a scary thing because especially when the markets get volatile and you hear all this crazy shit going on, right? This is what's going on. Even one of the biggest developers around town, I remember talking to him and he's like, I buy all my cars cash and my house is paid off. I want to know that if shit really hit the fan, I have a place to rest my head and I don't have to worry about that. But I'm like, you live in a $10 million house. Like downsize or do something. Like you don't have to like, it doesn't make that kind of logic doesn't actually make sense to me. It really doesn't because, okay, fine. You have $2 million in your home. You can use that $8 million Like that $8 million can go so far. You
Yeah,
can buy $40 million or a $30 million property or whatever with that. You know what I mean? It's crazy.
It's
to have
actually
that.
backwards. He's
It is.
saying that it's safer to have the house paid off.
It's
but
not.
in reality, because of our monetary system and inflation, it's
Exactly.
actually safer to lever the house,
Exactly.
pay the interest on it, and put that money to work in something that's likely to produce higher than the rate of inflation.
Exactly.
Now, people don't want to hear that.
No.
And we never, there's also such thing as over leveraging yourself. We never preach that.
Yeah.
We don't recommend you go buy pre-construction condos that you can't close on.
Yeah.
If you can't assign it and you have to close on it and you're cash flow negative $1,500 a month,
Yeah.
of course that's stupid leverage.
Yeah.
But leverage intelligently used in real estate is cash flowing properties using the bank's money that are in quality locations with solid fundamentals.
100%.
That's how you get ahead.
Yeah.
If you don't use leverage, you are not going to get ahead in this
Yeah.
world. You will be stuck in the middle class
Yeah.
for the rest of your life.
Yeah.